How would you like a simple system to trade the moving averages you see on the GDAX platform? I've been steadily making gains in the markets for 24 years, and I'm here to tell you that using moving average is a great tool to help you make steady gains as well. Today, I'm going to show you the 6-step process I use when analyzing moving averages. Okay, so let's go ahead and get started. The first thing I do is I use moving average to identify the trend. If the trend is going up, the moving average should be going up. If the moving average is going down, I do not want to be buying. This is the first thing I do. It's very simple. Analyze the trend. When it's flat over here, you see the 26 EMA and the 12 EMA. They are starting to flatten out, particularly 26. I stay out of it during this time period. It's not giving me any indication of what it wants to do. It cannot tell me if it wants to go up or go down at this stage. So that's my first thing, is I identify the trend. This number 2 thing is I'm looking for higher highs and higher lows here. Higher high, higher low, higher high, higher low, higher high, higher low. You should see this anyway. This should be reflected in the moving average, but you will see certain instances here and here and here where you're actually getting lower highs and lower lows. These are areas that you want to stay out of. It's pretty obvious, especially when you throw the moving average up. You want to be going into these green areas. You want to see the higher highs and higher lows along with the moving average to go up if you're wanting to buy. If you're wanting to short the market, you would want to come over here and you want to see lower lows and lower highs. The third thing I'm looking for is something I've talked about in my previous videos, is value. The 12-period estimated exponential moving average is a great tool for looking at value. As these cryptos move away from the 12-period moving average, you can see that it's less of a value. The market has been psychologically or emotionally or driven up by hype usually, or just over trading, overbought, and it will always come back down to try to find its true price. So I do not want to buy anything that is far away from the 12-period EMA. I want to buy things that are close in to the 12-period EMA. This signifies a value to me. Now, is this a value more valuable than this? Well, it doesn't matter, because the underlying market is saying the price is going up, but you do not want to, as the price is going up, the trend's going up, you do not want to get overextended from the moving average. It shows you that it's not a value. This right here is still a good value, even though it's much higher than this time period here, but it's close to your 12-period EMA. This tells us that the world market, everything that's thrown into the Bitcoin market, is finding this right here on this particular day a pretty good value. This is not a good value because it's so far away from this EMA. Again, the closer it gets in, the better of a value it is, and you want to only select this during an uptrend. So the number 4 thing, and I'm going to do quite a few videos on this starting tomorrow, is looking for particular candlestick patterns, and each day I'm going to knock out a candlestick pattern on my videos. I have about 5 that I really look at after 24 years of trading. These candlesticks probably have as many as 40 different patterns and potentially a few more. And I've gone down that rabbit hole before, researching and evaluating and analyzing and using all of these different candlestick patterns. I virtually have come down to basically 5 that I look for, and these 5 kind of take in most every movement that there is. So be sure to subscribe and follow me as I uncover the 5 candlestick patterns I look for. But what you want to look for, in essence, is a particular candlestick pattern at a value point in an uptrend. Value point, uptrend, good candlestick means buy. Value point, uptrend, good candlestick means buy. And same thing down here. I'm pretty sure, most certain, I would have bought in right here on Bitcoin, potentially here, possibly here it's starting to get a little farther away from me, I would start feeling like if I didn't get in very quickly here, I would not have gotten in here. Start feeling like this is not a good value for me. It's getting too volatile. I feel certain I would have gotten in here. It's hard to tell, not being able to see the days before, but this would have been the point, the prime buy-in point, based on everything I'm telling you today. And you can see that if you get in here, it pays off pretty handy. So the other thing I would do is the way I would use these moving averages is my entry. I would only enter a trade once it hits this moving average, or once I find good value at this moving average. Once I find a proper candlestick, I see my higher highs and higher lows. I know things are going up really well. In general, is I would only buy if the previous day had closed in the top 25% of that day's trading range. So if I would have been buying in this day, I would have wanted to analyze this particular day and make sure it closed in the top 25% of its range. Just looking, it looks like it did, and I would have bought in here. Here would be another buy-in day, potentially as it come down and bumped close to this 12-day moving average. I'd have been wanting to watch a shorter time frame on this and analyze it, but this potentially could have been a great day for buy-in, and I would have bought in on this day because this day closed in the top 25%. So we're looking for value, and as you enter, you want to close, purchase one, or make a long shot or a long call if it closes in the top 25% of the day's trading range. And the last thing, I would use these moving averages to set my stops. If I bought in right here, I would have set my stop right along in this area, just below that 12-day EMA, exponential moving average. As the prices of Bitcoin goes up, I move my stop up just under this 12-period EMA, and I just keep trailing along and moving it just under this 12-period EMA. And what that does is, if things go bad, I will be able to lock in my profits, and if things go really bad when I get started, my losses will be minimized. So you can see as you follow along just under this 12-period EMA, and you depend on this stop loss to get you out, you get stopped out somewhere right along in here, which means you would have made a ton of money before you get stopped out. So I would use this 12-period EMA to get stopped out. Now I potentially may have looked at candle patterns and looked at some other things, and had a few other decision making ideas that would have got me out maybe right along in here, but if nothing else but a stop loss, you get out here. So that's my 6-step process of the way I would actually enter trades and systematically use this 12-day EMA in GDAX. So I'm putting together a PDF of my complete trading system. It has taken me over 2 decades to develop this system, so you'll want to keep checking in with this channel to make sure that you can snatch up this PDF just as soon as it becomes available. I will also keep making new videos each day, so like and subscribe. Be sure to ding that bell so that you can get notified when I come out with a new video. In trading, you must train yourself to be like the lion. Most people do business and trade like a scared gazelle. Train yourself to be like the lion. Dominate your domain. Analyze, educate, and when it's time to take care of business, you take care of business. Remember, if you don't kill it, your family doesn't eat. This is Blake Storm, SniperInvestor.com.